Hello, and thank you for listening in to our Inspire Semiconductor November 2023 business update. We appreciate you joining us. This is John Kennedy, the CFO. And I'd just like to take a moment to point out a very typical safe harbor disclaimer for everyone to please take a look at and keep in mind that many of the statements we make during this presentation are forward-looking statements. With that, I'd like to turn things over to James Hickman, our Executive Chairman.
Great. Thanks, John. Thanks, everybody, for taking the time out of your busy lives to spend a little bit of it with us and learn more about InspireSemi, especially if you're an existing investor. In my view, it's always an imperative, sacrosanct obligation on the part of management and the board of directors to be as transparent as possible with shareholders about the company, about its operations, but more importantly, its vision and the plan to achieve that vision. And just on this note of forward-looking statements, et cetera, we're going to try and be as transparent as possible in this call so that everybody understands what it is that we want to achieve. Obviously, part of that, there are going to be forward-looking statements. And we should be clear, nobody's got a crystal ball. Nobody can say with 100% certainty, this is exactly what's going to happen. Obviously, that's ridiculous, but I still think it's important that everybody should understand what we as an organization are trying to achieve on your behalf, what we're trying to do with InspireSemi. And that's what we aim to do today with this agenda. We're going to talk a little bit about InspireSemi. We're going to talk about our product, the Thunderbird solution, the accomplishments. And really, we want to paint a picture of as best we can. Again, no guarantees about the future, but we want to at least help people understand what it is that we are trying to achieve. We obviously have goals. We have a vision. We need to help you understand really what that is and how we're going to make it happen. Our vision is very clear. We have a very, very, really a big vision. And the vision is we are focused on developing highly disruptive technology in the high-performance computing space in particular. High-performance computing, these are some of the world's most important companies solving some of the world's biggest problems. And what our solution, our design, Thunderbird, what this really does is it gives them a massive competitive advantage to be able to do that better, faster, swifter, cheaper, lower power consumption. These are all things that we have designed the chip around what we want it to be able to do. We feel that we've accomplished that. And Alex Gray, our CTO and founder, is going to talk here next about what it is from a technological perspective, why we say that from a technological perspective, why we think Thunderbird is such an effective solution, why we think it actually will enable these high-performance computing businesses to do things on faster, less power consumption, et cetera. Doug is going to talk a little bit about what the market is saying about it. Doug's out there in the trenches on a regular basis. He travels constantly. He talks to customers, prospective customers that have actually, we are no longer a pre-revenue business, people that have actually written us checks, signed purchase orders, people that are in our pipeline, people that want to get into our pipeline, people that are really enthusiastic. I mean, these are big companies and companies that are entering and what they're saying about Thunderbird. And it's important, I think, that people understand that. We'll explain to you where we think this can go and what we are doing to try and achieve that, the plan, the pathway to do that, what that looks like. In terms of key accomplishments, I think it's important to point out that this is not a small company. If you look at the size of our business or you look at our market cap, it might seem like we're a small company. We do not think like a small company. We do not act like a small company. We have tremendously talented engineers. We have a tremendously talented team across the board. The people on this call, very, very talented people that are working diligently, tirelessly. Nights, weekends. I mean, it's been incredible to see that, to try to achieve something that's really, really, really big. And we are right there. We have reached the point where we are on the cusp of being able to be in full production with our chip, basically just pending funding, which we'll talk about here in a little bit. We were able to achieve that over the last quarter. As well as the last quarter, we were able to send what's called an emulator board. It's like a scaled down version of our chip to our very first customer. Based on that, we were able to get feedback on the technology from our first customer. We use that feedback to make a deliberate and strategic decision to improve the product in a way that is absolute no-brainer, because not only is it better more sellable, more marketable, even what we believe will be even better out in the marketplace, but also even more profitable for the business. We took something that was great and very profitable, we turned it into something that we feel is even better and even more profitable. And so you're going to be hearing about that from Thomas and from John Kennedy, our CFO. So without further ado, with everything that we've accomplished, completing the dry run tape out with the new enhancements, the customer feedback, signing more customers, bringing more customers starting into the pipeline, everything we've accomplished, we're going to go ahead and kick it over to Alex Gray, our CTO and founder, to tell you more about Thunderbird.
Thanks a lot, James. We just want to review the reasons we think this is worth all the effort and money that everyone is putting into it. We often compare ourselves to data center GPUs like NVIDIA's, and that's the highest bar we could possibly set for this product. They are the largest incumbent in the HPC ecosystem that we are entering. We don't have to take a single sale away from them. We don't have to beat them on every front. There are a lot of applications that are desperate for a product that serves them at all, because these GPUs, while they're able to do a lot of math fast, they're very hard to get efficient utilization of that capability. So we've always striven to match them and some of the other potential competitors out there. We've always matched them on raw horsepower, the number of computations we can do per second, theoretically. We always are at least in the same ballpark as their theoretical maximum arithmetic throughput. The key difference here is that because of our architecture, we can utilize that capability much more efficiently. We've heard from some customers that 95% of their applications don't work on a GPU at all. We've heard from others that they're happy to get 1 to 2 to 5% of the nameplate utilization or capability of that GPU. And we believe that because of our CPU-based architecture, we can get much higher utilization of essentially the same top line rating. We also have prioritized power efficiency much more than certain others have. That's come in part from our roots in the blockchain world. Energy efficiency has always been critical there and in AI, and more so in every aspect of computing. People just can't get enough power into their data centers to run all the computers they want to. And that's even if the cost of the power is no object. So our designs have always excelled on power efficiency, even compared to GPUs and other competitors that are on much more advanced manufacturing processes. Pricing or cost, we also have a huge edge, in part because we've kept the development costs so low. We don't have to amortize a lot of that, and the raw materials that go into this are pretty minimal. So we have huge pricing power. The competitors out there are very expensive, and we can, I believe, we'll be able to command very good prices. But even if we have to undercut them slightly on price, we have huge margin to do that. I think we may get into the details on cost a little later. Another huge advantage of this is the versatility and the ease of programming. GPUs have their own language essentially, which a lot of it's an additional obstacle to adopting them. Our platform can be programmed in exactly the same way as any CPU-based computer. Same as your server, the same as your desktop. It's a slightly different instruction set, but it's the same compiler or the same commands that you use to build your applications for our product as you would for any other computer. So there's very little obstacle to customers adopting it in that sense. Another key advantage is double precision arithmetic. This is critical to scientific computing. Their simulations need 64 bits of precision for all or most of their computations. And GPUs are able to do that, but not very efficiently. They've focused much more on low precision math, which is what AI mostly uses, 8-bit, 16-bit precision, which just isn't useful for scientific computing. At some point, some customers have said, you're just guessing. So that's another key advantage. And again, we match or exceed their throughput on the arithmetic. And another advantage that we actually weren't aware of at first, but customers have pointed out to us, is that our platform is fully deterministic. That means that it does operations in a predictable amount of time and in a predictable order, which may not sound huge, but it actually can affect the results you get. This has been an issue in the AI world, and it's a huge issue in financial and certain other critical applications. If you don't get the same result every time in a predictable amount of time, it's just not useful for certain customers. And we've heard that that's a major pain point, and people are excited to have a product that they can actually predict the behavior of. I think we may discuss that in more detail later. With that, I will hand it to Doug Norton. Is there anything you would add?
Yeah, I'm Doug Norton here. For those who don't know me, Chief Marketing Officer. Those last two bullets are really important. We just have finished a couple of conferences where we really came out publicly for the first time, presenting and exhibiting in those cases. So HPC and Wall Street back in September was one of those. And it turns out that double precision math is not just engineering scientific. A lot of the Wall Street firms require that as well in their simulations for their customers. And the deterministic is also big, where we knew one of the big applications we fit well in was what's called graph analytics, which is used a lot for fraud detection and anti-money laundering. But this deterministic point puts us right potentially in the trading floor. This is just, it fills a big hole that they have between what they can do today with, kind of just basic server computers and, what's called FPGAs. So the more we talk to customers and get out there, the more excited they are, and the more applications they're telling us that this is going to let them go after. So the next slide. So that's really kind of a little bit of it. The market feedback with the product market fit is turning out to be just amazing for this. The timing is fantastic. Alex alluded a little bit that GPUs, really good at AI. They're going to some of that lower precision math. There's a lot of keynote presentations at these conferences where some of the top people in the industry from major computer centers, major corporations, major national labs are getting up saying, we have a big problem here because a lot of these other products are being driven by this new generative AI stuff, and to go after this really low precision math and leave a lot of this behind. And what are we going to do? And our timing is almost just so perfect to be coming into this market where a lot of those people are chasing those shiny objects, if you will. And we're going to have a product that works for a lot of people, solving a lot of problems around the world every day. So we've gotten that feedback. I just literally got back about an hour and a half ago from Denver at the annual supercomputing conference, SC23. And people are just very excited as I presented on two different sessions about what we're doing and how disruptive it is and how it really is what the industry needs. Here's just one example quotation from one of our customers. I get these all the time, but this one kind of hits some of that point that we're not just status quo. We can't just have this incremental progress. We need something like our Thunderbird product to kind of come in and really make a step function improvement in the marketplace. So that's why we continue to add customers. Some of these things have taken a little longer to get through procurement than you think, but the good news is we're on their approved vendor list now. We're all set up in their systems. We just added another paying customer, 2 more in procurement, and there's definitely a bunch more in the pipeline, especially after these last couple of conferences. James talked about at the top of the call that we deliver an emulator, which is essentially a slimmed down version of our Thunderbird. It's got less cores and runs slower, but it lets people get up and going with software and functionally validating the product and their software on it, such that when we actually deliver them the real Thunderbird boards with the chips on them, they can very quickly just validate it, move it right over to that and validate it works. So this first one was to a major national lab. And then our latest customer is a major computer systems company that's in the HPC and AI space in a big way. Currently, $750 million plus and growing very quickly. So they're on board, and again, a couple more good ones coming behind us. So very pleased. Again, just no lack of enthusiasm. People are just like, when do we get this? So I hear that all the time. And with that, I'm going to kick it over to our Chief Operating Officer, Thomas Fedorko.
Yeah, thanks, Doug. I'd like to take just a minute to highlight a few of the key accomplishments and product enhancements of our Thunderbird product. So the team here has worked real diligently to deliver that emulator we've been talking about to our first customer. Then we invested some time collecting feedback from customers and decided to make some additional modifications to Thunderbird that both improve the product performance and its profitability. We enhanced the chip's capability by designing in built-in self-testing. And this has 2 real key benefits. First, it de-risks the production process, and then it maximizes the confidence that we can scale quickly after receiving the first silicon chips back from TSMC. And for those who may not know, TSMC is the world's largest and most advanced wafer foundry in the world, and they're our wafer manufacturing partner for the Thunderbird project on their 12 nanometer node. We also made the deliberate decision to add enhancements to our final PCIe board product by doubling the number of Thunderbird chips, and by extension, doubling the number of cores on each board that we sell. This directly translates to the price we can charge for the board. Now, the great news is our manufacturing costs don't increase proportionately, so this is a great fit for our product margins. And the last major milestone I'd like to highlight is kind of what we've touched on a couple of times already in this presentation, and that's the completion of this dry run tape out that we did with TSMC. What this does is it proves our compliance with the myriad of TSMC design rules. This is one of the last and most vital steps prior to releasing the design for manufacturing. Since this is now complete, the full production tape out is now essentially paced by funding. And with that, I'll hand it off to our CEO, Ron Van Dell.
Ron, I'm sorry, you may be on mute. If you could hit that.
Thank you, Thomas. So, as you've heard from the presenters so far, this company and this team have advanced very methodically and very efficiently towards a position now where we're coming out of that point of being the proverbial starving startup, and now we're ready to pivot and get our product in customers' hands, ramp production, and become an amazing business from a value creation perspective. And so, as James mentioned, everybody in the company thinks this way about not being in a small company, but being at the critical point in building an amazing company that will scale very rapidly. So if we just go through the sequence of our beliefs that lead us to that kind of motivation, and that we think should resonate very well with current or prospective investors, you have to start from the outside and work in. We're playing in huge potential markets, $10 billion markets with double-digit 20 to 25% combined annual growth rates. So this is a big market that's just getting bigger fast. HPC, as we've also alluded to, high performance computing, is a bit underserved. There has not really been a perfect fit solution for what these customers working on these important problems actually want from the semiconductor world for the accelerators that are key to them solving some of these important problems. We are able now to deliver the best-in-class solutions to this market, and we do not see other companies that are positioned as well as we are to do that. So what does that give us? That gives us competitive advantage that translates into a very strong value proposition that's been reinforced not just by us talking to ourselves, but by lots of feedback from very diversified industry leaders out there in the marketplace. And we think that enables us to build something for hundreds of dollars and sell it for thousands of dollars and still be the best value in the marketplace. In addition to that, we are a fabless semiconductor company. We do not build our own $20 billion a piece wafer fabs. It's an extremely capital efficient standpoint, both from a CapEx and an OpEx perspective. So we're at the end of a pre-revenue phase. We're already getting into those early written, we're not kidding, cash the checks kinds of commitments from industry leaders, and we have the potential to grow very quickly. We have a fantastic team that knows how to carry the company beyond this point that we've gotten to. And if we go to the next slide, you can visualize where does this end up? Once the product is in hand and the ramp is underway, it is ramping into big markets with strong competitive positioning and therefore great margins with very efficient OpEx. So we're not scaling OpEx to match sales. We estimate this company will be profitable in less than 12 months after we're ramping this first Thunderbird product. Continuing down the kind of do the math mindset, even modest market share in this market equates to 8 to 9 digits of annual sales. If you think of it from the standpoint of enterprise valuations, and again, there's no guarantees here, there's no perfect science here, but companies in the semiconductor space doing these kinds of highly differentiated products with high growth are looking at great multiples on a price to sales basis, share price to company sales. So achieving the plan should lead to very strong growth in company value. And literally, we are right, as James said, we are on the cusp of a cascade of value drivers that are coming over the coming quarters, whether it's joint press releases with leading customers or getting the Thunderbird chip in hand or first production purchase orders, reaching profitability, continued sales ramp milestones. It's going to be up and to the right starting very soon. This is a very quiet company. There hasn't been much work to promote the stock on the Toronto Exchange to this point, and that's about to change very shortly. And then it'll be just a cascade of news and validations and ramping of the business that will drive shareholder value. The question is, how do we get there from where we sit at this moment? And with that, I'll turn it back to John Kennedy, our CFO.
Thank you, Ron. I appreciate that. So first of all, I'd like to just start out and again express our appreciation to all of our existing and very supportive investors over the years. Obviously, we wouldn't be here without you. So again, many thanks to all of you. And we'll talk about kind of 3 phases of fundraising that we have in mind, and that we're very active with all 3 already. And this gives us a very clear path to achieving our continued success and accomplishing what we need to do to get to market, do the tape out, get to market, and scale into revenue pretty quickly. And I'll just point out, to date, we've done all of this on, you know, a relatively small budget for a company of our type and industry. So we've raised around $20 million US so far. So we've been extremely prudent and efficient with all of the investor funds that have come in. And we have many customers, supply chain partners who are just quite honestly blown away that we've accomplished what we have. But as Ron just said, we're there and we're ready to go. So with that, the most crucial funding right now is to kind of fund this next 3 months. And it's kind of 2 parts. And this would all come from the private placement that we just announced on October 31st via press release. And I'll get into some details in a little bit. But it helps us sustain operations and bridge to a next round, which I'll also talk about shortly. And then we also need some funding to do the final pull the trigger on the actual tape out of the Thunderbird product. I think those investors who have been with us will recall this, but for anyone new listening in, we have approximately $3 million prepaid on account with Taiwan Semiconductor Manufacturing Corp, or TSMC. Not a small feat, obviously, but the total cost is around 3.5 to 3.6 million. So that's where we're indicating here that we need incremental approximately 600K for that. And I'll get into the private placement details in a moment, but there's plenty of room in the private placement for both of these amounts that are needed to continue, as well as room for strategic and other investors that we'll talk about. So with that, our medium-term plan, so again, this would be kind of phase 2 of fundraising, but it's actually well underway in the next 3 to 9 months, is really to talk to strategic investors and kind of a bit larger financial investors or firms. So we have many discussions at various stages already, and these funds will help start that production ramp and fulfill our initial customer orders. So obviously very important. And we really anticipate that we will get to a break-even point in 12 months or less once we're off to the races and in revenue and customer shipment mode. And then longer term, and this could be a combination of equity, but actually historically at other companies that are in a rapid growth phase that I've been with and a lot of our team, we've been able to finance quite a bit of this stage via traditional bank debt. So once we're into order systems and committed supply agreements with our customers, that's something that piques the interest of typical banks to do a line of credit or similar funding solutions against that. So that will, help us, kind of fund the hockey stick in terms of our revenue growth. And we obviously feel that our value will increase, obviously, as we have sales revenue and achieve that hockey stick and continued customer sales. A few key accomplishments, that we'll just point out. Again, we have many conversations going on. It's every day of every week. We're having very good conversations with strategic and financial investors. So these are folks that could be industry specialists, OEM, or large technology company. But what's interesting to me is that we're really seeing a very good mix of both financial and strategic investors that we're talking to. So even if it came to a point where we brought in a couple of strategic investors, it's appearing that we could parse that out and not have anyone be competitive or have any issues there. So a goal is to provide us the resources to reach escape velocity in 2024, which 2024 is obviously right around the corner. We've really, again, as I pointed out before, we take seriously the funds that investors put into the company. So we've done cost cutting where we can, make the dollars stretch further, brought down a bit our monthly OpEx and burn, which again isn't that extreme to begin with, but we're always conscious of that. And again, all of the discussions that Doug and honestly the whole team, because technically the engineering team could be involved as well, the customer revenue ramp just seems tremendous. And also on the customer point, it's very important to say we're dealing, with national labs and OEMs and other technology companies. So we're really hitting a diverse group or set of verticals or industries. So we're not feeling that we're going to be reliant on one industry to achieve our whole business plan and revenue growth. So obviously always good to have that diverse mix of customers and industries. Just quickly, I'll talk about the current private placement that's underway. Again, we announced this private placement for up to $5 million Canadian, that is. And that again is to allow room for the near-term capital needs that we discussed a couple of slides ago, but also to leave room for these strategic investors as they come in. This is a direct equity versus a convertible debt raise or private placement. So it's priced at an effective per share price of 10 cents. And we've added a half warrant kicker, if you will, to each share at an effective price of 15 cents Canadian. We can do multiple closings on this. We've actually had some investors fund under this private placement already. As always, term sheet and other information can be provided. You can click on the or email to the invest@inspiresemi.com, or obviously feel free to reach out to me directly. And with that, I'll turn it back over to James.
Thanks, John, and everybody. Just to kind of close things out and review a few things we heard from the team. We heard from the executives. Alex Gray, our founder CTO, explained a number of unique and competitive advantages of Thunderbird. Doug discussed some specific feedback about feedback we're getting from customers about why they're so enthusiastic about Thunderbird specifically. Alex explained, for example, that some of the incumbent technology just simply doesn't work on a lot of the applications that HPC customers need. And so people looking at Thunderbird, they see the design, they go, oh my God, that's exactly what it is that I'm looking for. And so we're getting this feedback over and over and over again. We have several customers in the pipeline. It's not just words. We're actually getting customers in the pipeline, people signing purchase orders. We've cashed that all important first check. And if you look at it, Ron explained, this is a large market. This goes into billions, 10 billion plus markets growing very, very quickly. So from a top-down perspective, again, just a small sliver of that market is 9 figures in revenue. But from a bottom up, again, we just signed a customer that does $750 million a year in sales on HPC hardware, and that's one customer. So again, you look at a small sliver of that handful of customers, it's a number that starts to add up. And we mentioned already that this is a very high margin product, and because of some of the deliberate decisions that we made based on customer feedback, the team said, let's go get customer feedback before we go out and we spend that $3 million at TSMC. Let's get the customer feedback where we can and really, test this one last time to make sure we got really valuable feedback, and said, oh my God, we can actually make this better. We can make it even more profitable, and actually went and did that, made a very good decision to do that. So we took a high margin product, made even higher margin. And again, talking about something that can scale very, very, very quickly. John was talking about sort of the speed with which we can scale. And now we are at that point. We're on the cusp of being able to start full scale production, but we do need some funding to do that. And John walked us through that. Funding is basically kind of in a two phases. One is this sort of, in a way, kind of a bridge funding to get us to the scale funding. Some of that scale can be bank debt. A lot of times people, when we talk about raising money, people go, oh, I don't want to raise money. Raising money is dilutive. Look, raising money means if we can raise, frankly, a relatively modest amount of money, that gets to the point we can scale very, very, very quickly. It gives us the power and flexibility to be able to do that and grow and achieve the vision and the outcome that basically creates a really big pie for everybody. We think it's a very smart decision. And we have, as John pointed out, been having a number of conversations. I've actually been part of a number of those conversations. Some of them are large funds, financial investors, hedge funds. Some of them are strategic, other technology companies, et cetera. And it's really been quite interesting to get. There's been so much enthusiasm that some of these are actually, these conversations are some of these are progressing fairly rapidly. It's been very interesting to see. And all that together really shows how critical this current sort of bridge round is. It makes it absolutely critical to be able to achieve what we need to achieve to get us the resources that we need to close that scale round. Again, some of that scale we think we can take on some bank financing. Again, you go out and you sell a bunch of HPC hardware to a large financial institution. The first place you go is to the commercial banking division of that large financial institution to finance the purchase order. So there's going to be a lot of financing options that we'll be able to, that we believe we'll be able to use in the future. But it does make sense to think about equity to scale down the road. We think that's going to be in everybody's best interest. But the bridge round right now is absolutely crucial. Absolutely crucial. I can't stress that enough. We're all committed to this. Everybody, not only on this call, but on this team, believes wholeheartedly in what we're doing and how big it can really become. I say that, but actions speak louder than words. And not only have I already invested 7 figures in this, I'm investing in this round. I'm investing another 6 figures in this round. And I actually just recently spoke to a friend of mine who's also committed. Between the two of us, we're actually going to be taking a fairly sizable chunk of the in terms of this bridge round and what's necessary. I think I could probably go ahead and say this, but even many of the executives in their efforts to extend runway even further have taken some cuts and deferrals, which I think is extremely selfless and great leadership on their part. We're very appreciative of that. The team, oh my God, the team, I mean, has been working practically nonstop, trying to get everything in before the deadline, get everything buttoned up, working nights, weekends. I mean, even very, very late in the evening. It's been phenomenal to see. We had an onsite very recently at the office in Austin, and it was great for me. I was able to go out and meet the engineers. I mean, the talent in that room, ex-Intel, ex-Apple. I mean, people that are very, very decorated engineers, the talent, the brilliance, the commitment. And it's funny because we were going around the room and everybody was saying, I've never been part of a project that's so ambitious and has been able to accomplish so much with such few resources. And I think it's important to understand that in context, that one of the guys on the team, he was saying, I was on a project once that was much smaller in ambition than what this is. And we did it with, 2 or 3 times the budget, 2 or 3 times the team. And we thought we were rock stars for being able to do it on that. We thought we were doing it on shoestring. That's nothing compared to what we've been able to do here at InspireSemi. So there's been just a tremendous commitment to really respecting the capital that comes in, making sure that goes as far as possible. We really, really do respect other people's money and try to make that go as far as possible. And so again, we have a very, very clear vision of what we're trying to achieve. We've talked about that a number of times here. We believe, obviously, this could be really big. I would say, again, actions speak louder than words. One of the biggest actions is everybody on the team that's part of this business. The talent that we have in this organization, these guys could go get another job at some big company tomorrow morning. That's the level of marketability that they have, but they're in Inspire Semiconductor. They work for Inspire Semiconductor because they believe in this project. They believe in how big it can become. Rock star talent is attracted to huge challenges and huge projects, and that's exactly what they've been able to do, what they've been able to deliver here. So I think we probably said what needs to be said. We said a lot here. We've tried to look into the future. We've tried to give you a sense of what our vision is. Obviously, look, it's the future. Nobody can make any guarantees, but boy, is everybody working as hard as they possibly can to achieve a really tremendous outcome for everybody that's involved in this. It is going to require a little bit more support from shareholders, but we feel we're really at that critical point. We're at that sort of final gate. We have a very clear plan to achieve what we want to achieve. And again, we really want to thank everybody, not only for your time and attention on this call, but for your support and helping us achieve what we think this company can really do now and in the future. And that's all I have. John, if anything further?
No, that will do it. I'll go ahead and
Okay.
end the recording. Thank you.
Good. Thanks, everybody.